Astral has two major divisions, animal feeds and poultry. Its major brands include Meadow Feeds, Earlybird and County Fair. It was unbundled from Tiger Brands in 2001. Market cap 4.2 billion rand, price to earnings ratio 27.6 and a dividend yield of 2.9%. If we're focusing on Astral, where does this come up on the discussion, Paul?
Well, look, as you said there, it came out of the Tiger Group. It's a very well-run company. Chris Skitter is the top CEO. He's very, very well liked in the business. They've had their share of troubles lately, though, because understand they had a very positive trajectory since coming out of the Tiger fold. And this was really, in the last 18 months, a terrible time for them. They were hit fair and square by those rising feed prices, all the problems we alluded to earlier, all the cheap bone-in chicken imports that we've had from Brazil. So really it was absolutely disastrous. The Meadow Feeds part of the business, which is about half of revenues and at the current moment anyway, a big part of the profits, wasn't hit as badly. And I think that's because to some extent they're able to take their inputs, which are obviously the same maize and grains and all the other stuff, and pass those on to a certain extent to their customers, who are people that are in the agricultural business and animal husbandry business across the country. So a very well-run business, very well-positioned, but the share price took a hell of a beating because people had priced in the same sort of growth that they'd enjoyed in prior years.
Daniel, are you a fan of Astral Foods?
Look, I think it's been a very well managed business, as Paul said. But they've been under huge strain. I think they've been under somewhat more strain than the other guys, and part of the reason for this is that they are very dominant in the RQF space, which is the individual quick frozen space, which is mainly targeted at the lower end market. So that's been hit particularly hard because the lower end is also struggling in that space, and that would experience more pricing pressure from the retailers. So while a lot of the other chicken guys are trying to get away from that space, Astral is very dominant in that space, but that also makes them the lowest cost producer in that space. So as soon as we have some relief, expect some pickup, but I must just warn that that area of the market is prone to brining injection regulation, right? Which is where you inject the chicken with brine to offset the loss of moisture from the freezing and the defrosting process. Now, I think quite a few of these guys in the chicken space are around the 20 to 30% brine injection level. There has been some news from the Department of Agriculture, Fisheries and Forestries that they would like to look at an 8% injection level, which will obviously affect the mass of the chicken, and that affects all the numbers in the business. I don't think it'll be that low, but it's very possible that it could come in below where these companies are currently used to, and
is this
they
going
will
to
have to react.
a big negative impact on the industry as a whole?
It could, because like I say, if it comes in significantly lower than what the industry is used to, like 8% versus 30%, then the mass of the bird that you're selling is vastly reduced, and you have to actually, to get the same effective weight, you need a lot more volume and a lot more costs. So it'll be interesting to see what happens in that space.
Paul, this is rather a concern.
Yeah, it is, because obviously if you're taking a chicken and through the process you're blasting it with so much seawater that it's looking to be the size of a turkey and then selling it accordingly, but the customer's not getting any value, that's a problem. But I think the industry is aware of these things and could well look at its supply chains, because the objective, as Daniel says, is to rehydrate the bird rather than to kind of pass it off for something else. I do, though, think that you have to be careful at looking where the chicken goes, because as Daniel said, if you're big in the individually quick frozen market, that is the particular product which is at risk. But there are also, for many of these companies, other supply relationships with Nando's, for example, which, as you know, cooks the chicken whole and then chops it up as you wait. So it's a bit of a mixed picture. I'm not negative about the overall prospects for the industry, and I do think that one should note that those tariff increases were pretty significant. It wasn't just a couple of cents here and a couple of percent there. The government has come to the party, so to speak, and has really whacked some pretty heavy tariff increases, which should be good in the positive term, and we haven't really seen the share prices of these companies react.
Hot or not, Paul, on Astral?
You know, I don't know. The share price has moved upwards a little bit in recent weeks, which tells you that people are getting a little bit more constructive on this one. And I do think that it should be noted that I don't think we're going to see the same kind of increases in the soft commodities that we saw, because we won't have the same crop problems as we had in the Northern Hemisphere necessarily. So I'm beginning to get a little hotter on Astral, yes.
Daniel, hot or not?
Look, I'd say just coming back to the tariffs, they have introduced high tariffs, but what's happening now is that the Brazilian imports are being round-tripped, which means that they're going through Europe where we have no boundary to trade. So as long as that keeps happening, there will still be a large import problem, and getting a protection from EU trade is far more difficult than getting protection from the Brazilian trade. So the tariff is positive, but the positivity towards it should be vastly tempered by that fact. Also, one of the other reasons for Astral's significant share price drop was that they passed the dividend. And previously it was a very high dividend yield stock, which was very attractive. However, adding to that, they recently came out with a trading update indicating that the second half of their financial year is expected to be much better than they expected. So this could be indicating the beginning of some level of turnaround. If that means they'll get back to a high dividend next year, that's uncertain at this stage. So I'd say not hot.